Well, hello there, folks, and welcome to Miyagi Mornings, episode 102. Today we have an episode that should be relatively short, but it may be complicated to understand, even though it's not. It's one of those things like, when you understand it, it's really easy. When you don't understand it, it's difficult to get to the point of understanding it, if that makes any sense. So we have a question about crypto and taxation. This came on the sticky thread on the top of my MeWe profile, which is the best place to ask questions like this. Says, if my business accepts $100 worth of Bitcoin for a good, would I then owe X percent of tax on $100 value at the time of purchase, or would I owe X percent value of the Bitcoin at the time of paying the actual taxes? Since my business is new, I can only claim as much expense as my business brings in. That's true for everybody, no matter how new your business is. And it doesn't really pertain to the question here on revenue. That is in terms of dollar value at the time of the transaction, or the value of those coins on December 31st. I guess the end of the tax year is what he's getting at. If Bitcoin doubled by the end of the year and I never sold the coins the customer sent, did my revenue also double? Short answer would be no. That seems like kind of a jumble, but here's what he's basically saying. I go out and I'm conducting business. Somebody comes in and buys a shirt off the rack for $100, an Armani shirt or something, right? And so they buy that shirt and they pay me with Bitcoin. And I have a cost of goods sold in there. In other words, I have an expense against it. Let's say that it's $50, so I've realized $50 in profit. It's really irrelevant because there's a lot of expenses that go to running a business that then get kind of prorated across the whole thing as part of your what you call COGS, or cost of goods sold. So not only do you have the cost of the shirt that you bought from a wholesaler, you have the cost of the rent on the building, you have everything you can expense, electricity, depreciation expenses, etc. So the expense side of this equation is irrelevant. It doesn't matter because the expense is going to apply the exact same way to all your revenue. All you have when you've done that transaction is you have top line revenue. That's it. And in this case, it's actually easy to understand because he's not transferred, sold, converted to Bitcoin. So we'll handle it that way first. So the answer is you report $100 worth of revenue. That's it. How much you can expense, what you can expense, how you expense it is irrelevant. You have $100 in revenue. If Bitcoin quadruples, quintuples, whatever, doesn't matter. The time you receive it, it locks in that price at the amount of revenue that you received when you received it. Anything that's like an expense goes on the other side of the equation as a deduction off of revenue. So if there was some sort of a fee involved, or let's say that you sold it for $100, and by the time the transaction went through, you got $96. You reported $96 in revenue. Let's say by the time the transaction cleared, Bitcoin went up in value, and at the time that you actually received the money, as the settlement came, $104. That's the revenue. Doesn't matter. The amount of money that comes in is the revenue. Any fees, any expenses, whatever, are on the expense side of the balance sheet. That's it. If you don't sell, convert, trade the coin, you don't ever pay any taxes above the minimum, the received value of the Bitcoin or any cryptocurrency. Bitcoin is irrelevant to this. You've received a cryptocurrency according to United States tax guidance as a merchant selling a product. When receiving the currency, it's revenue. Even though it's not revenue because they say it's not a currency. This is where it starts to get gray, but it's very easy to understand. So when do I pay more taxes on it? If at some point I sell that Bitcoin and it's gone up in value, I will now pay taxes on the differential. This is assuming you're doing all your reporting above board. So let's say I take it in and straight on $100 so we can keep it straight in our head. And it doesn't matter if it's that year. It doesn't matter if it's 10 years from now. Let's say that little piece of Bitcoin, those Satoshis, are now worth $150. When you sell that Bitcoin for $150, or that, it doesn't matter, it could be Atom, it could be Cosmos, it could be anything. It could be R, doesn't matter what it is. If you're being above board, when you sell it, you would now pay tax on $50, not of revenue, capital gains. It's a weird world that we live in, that we can have the same thing be two different things. Effectively, the way this is working out, when you receive Bitcoin for merchandise, you've purchased it. Weird, I know, because when somebody gives you $100 in U.S. currency, you didn't purchase it, and if the dollar's value goes up over time or down over time, you don't get to take a deduction on the loss or have to pay taxes on the gain. Cryptocurrency's in this weird world. The government is set up to benefit it, not you. Surprising, I know. So let's say that you receive the Bitcoin, $100. 2 months later, Bitcoin goes down 20%. Now it's worth 80. And you're like, I just want my money. So you sell it. Now you would take a $20 capital loss. It works in both. They can't have it both ways, right? So you receive the Bitcoin, it's revenue. You sell the Bitcoin, it's a loss or a gain, all right? Based on the differential between the time you purchased and or sold or traded. There's a way you can play this to your advantage. Here's an example. Let's say your business takes in a shitload of Bitcoin this year. It takes a shitload of cryptocurrency in. You don't ever really want to sell it. It goes down, everything, the whole market comes down in value. If you convert all of it into like a really great cryptocurrency for long-term holding, i.e. Bitcoin, and it creates a big capital loss, it's a capital loss. So let's say that in my operations, one of my favored cryptocurrencies is something like Litecoin. And let's say I took in $10,000 in Litecoin and I reported that as $10,000 worth of revenue. And the crypto market really takes a shit this year, and my Litecoin that was $10,000 is only worth $5,000. Again, just pulling numbers out of my ass here to make it easy to calculate. I would have had $10,000 in revenue, less expenses on the other side of the balance sheet. That is just straight up revenue. In the trade, I went from Litecoin to Bitcoin, and they move very much in concert. 98% together is the movement ratio between Litecoin and Bitcoin. So we could do this either direction if we were understanding each other. Okay. Now, before the end of the tax year, I convert all my Litecoin into Bitcoin. That's a trade. It's a trade. Guess what? I now have a capital loss of $5,000. You see, this is what I'm talking about. When you have to focus on the 95% of the text code that tells you how to not do what the 5% says you have to do. That's how the tax code works. Most of the tax code is this big. Little bitty piece of it says this is how much you have to pay. The rest of it is how you don't pay it. That's one strategy. There's lots of strategies. This is where it gets very difficult. It's easy to understand, but complicated to do. Every time you sell or trade or spend, by the way, spending is also considered selling. So let's say I get my Bitcoin in and I pay my supplier with it. The differential between the receipt and the purchase is considered basically a capital gain timeline, shorter long-term gains, that's up to your accountant. And when you bought something with it, if it was worth more, you realize the gain. If it's worth less, you realize the loss. So that's another strategy you could employ. You could use your cryptocurrency that's currently at a loss to buy stuff and take capital, then take cash and buy it back. Cool, huh? Right? There's a lot of ways to do this, but this is where it gets complicated. If you are over time receiving lots of small transactions and spending, it's almost impossible to get right on compliance because you are supposed to use first in, first out. In other words, when you spend that Bitcoin, you're supposed to be saying, I spent the oldest Bitcoin first, because they realize over time that's the most likely to have gains. And then you can play games like, but I got this Bitcoin today and spend it today. Well, it all depends. It all depends. What if it actually is that Bitcoin? Like if we have one giant account that they all come into, or there are no accounts, one giant address they all come into, well, that's one thing. But if we actually have different addresses they come into, we spend it, that Bitcoin came in, that Bitcoin went out. Does it work? I don't know. They don't know. They don't provide enough guidance to know whether that's true or not. With individual trading accounts, it works. IRS has given guidance on that makes that really clear. It's a mess. It's easy to understand. You receive it, it's revenue. You spend it, you trade it, you sell it. It's all the same. And you've realized a gain or a loss in between. Again, there are ways to use this to your advantage. Here's an example. I made not the best buy at one point in my life on some Litecoin. I actually blame Coinbase for this. I got overcharged for it during a run-up. I tried to buy it. It was supposed to be instant. It didn't clear for 3 days later, and I ended up paying an inflated price on Litecoin during a run-up. I won't get into how, just that's what happened. Like, it was supposed to be transfer instant purchase from your bank account, blah, blah, blah. And when I did it, it's like, it took 72 hours for the purchase to go through. And Litecoin went up like $80 freaking dollars. And I bought quite a bit of it. What this did is when I amortized all the Litecoin that I had sitting, I had a loss of about $3,000 due to that one fairly large transaction. And in the same tax year, I had actually purchased a car using cryptocurrency. Now, I'm all about not paying the man when you don't have to pay the man, but when you convert Bitcoin to cash, transfer cash to your bank account, and then pay Doge, not Doge, Doge. And it's, by the way, media, it's not Doja coin. It's not Doja coin. It's Dogecoin, you morons. We'll get to the media in a second as I wrap up today. When you do that, you report it. So I had a significant capital gain on some Bitcoin and some Ethereum that I used to buy my car. And that, fully above board, I will pay my taxes. And I sat there toward the end of the tax year, and I looked at that Litecoin and said, well, why don't I just sell my Litecoin into Bitcoin? I had a $3,000 loss because they said it's not a like-kind exchange. They're the ones that shut that down. So then that $3,000 loss offset the gain on roughly $20,000 worth of crypto that I spent to buy a car. I don't make the rules. I just follow them. Now, I do want a little bit of a media rant here at the end. I listened to two bimbos, and I'm sorry, it's the only word for them, at least in regard to this subject, on Fox News today, trying to explain cryptocurrency. One playing stupid and the other one trying to play smart. So the one was, because the good cop, bad cop thing, we're like, but I didn't understand. And the other one that was explaining it, she understood less. I'm going to tell you right now, here's a prediction from Jack. My predictions tend to come true. About 5 years from now, we will watch clips of these idiots discussing cryptocurrency, pasted together in montages. And if you go back right now, you can look at similar things that were done when the internet was kind of coming of age. And there were these idiots like on Good Morning America going, what exactly is the internet? Oh, let me explain it to you. But what is the @ symbol? Like, they were just absolutely, the people that were supposed to know didn't know jack shit about internet. Jack shit. That's what these things are going to be right now. And there was a guy on Fox News, and he was explaining how, but let me see if I can understand this. And he really seemed like he just kind of ad-libbed into this. He was smarter than both of them put together times 10. He's like, so right now, like if you want to conduct international business, you have to fill out like 7 layers of stuff. But if you use blockchain, you could have a direct transaction. And then the smart bimbo goes, well, maybe eventually, but we're not there yet. What do you mean we're not there yet? Supposedly every international crime syndicate in the world is moving billions of dollars around the world in a frictionless environment with this blockchain technology, but there's no way for corporations to do it yet. You idiot. You idiot, the technology's there. And this is what the media is talking about right now. Summing it up in a phrase. They're not using the phrase, but this is what they're saying. It's blockchain, not Bitcoin. Morons, that's what was used to raise billions of dollars, most of it flushed down the toilet in 2017 with venture capitalists out in the Valley, California. We've moved past that, morons. That's a failed experiment. It's not blockchain, not Bitcoin. It's Bitcoin as a reserve currency, as an underlying financial asset, because it's incredibly hard money. That's the new world that you live in. They are literally going back 4 years and think they're on the cutting edge. That's how stupid these people are. I bring that up here only at the end, not to reinforce a cryptocurrency topic, but so you stop listening to these mental midgets who have their shit put together for them by a bunch of 20-something morons, grad student intern types who do a little bit of research on freaking the internet and can't even figure out the right way to pronounce Dogecoin. There's no A in there. If you can't pronounce Dogecoin, you have no business talking about cryptocurrency. None. And that's the bigger issue here. Like I'm saying with this, let the crypto go for a second here at the end of this episode. They have no business talking about most of the things that they talk about. None. They're mental midgets. If you took 5 of them and added their IQ up, it'd be a pretty low bar tab to pay. With that, I'll come back tomorrow with something non-crypto related, something a little different. Another episode of Miyagi Mornings.